Most traders fail because they overcomplicate everything. Too many indicators, too many strategies, too much noise. But today, I'm going to change all that. I'm going to break the cycle that you've been in. In this live session, I'm actually going to show you one trading setup. One trading setup you can master, repeat, and trust. If you've ever felt stuck and inconsistent, maybe this live session will change the way you trade forever. Let's get on with it. Let's talk about it. Ladies and gentlemen, fellow traders, good to see you again. Welcome to the live show. Welcome to Trading with Rob, as usual. And here we are on another fine Thursday afternoon. I believe there's lots of holidays going to be going on in the USA soon, so I doubt we're going to have a busy live show, but we're going to have a live show nonetheless. And today we're going to talk about that one singular strategy that you can use, that you can take with you and get ahead with trading. Are you still finding yourself struggling and going from place to place, looking for that magic trick, that magic pill to help your trading, looking for that new shiny tool, getting caught up in the never-ending cycle of doom, that circular thing where you go from one trading strategy, one to the next trading strategy, one system to the next system to try and get ahead, believing that charts are going to make you money, number one, and not understanding that you need a business plan and a strategy, number two. But we're going to look at the charting system today. We're going to look at that one system that you can use to actually trade with. For those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob. And it's Trading with Rob, and it's Coffee with Rob. We always have coffee together. And for those of you who don't know me, I've been doing this a long time. Been doing this for over 34 years. So, yeah, it's been a while. But understand, most traders lose money. Trading is risky. And if you don't like risk and you don't like losing money, yeah, probably shouldn't be trading. You should be doing something else, like being a dentist or a doctor or a pilot or something equally easy. Maybe a stuntman would be less stressful. Let's have a look at the trades at the moment, and then we'll get on with that one strategy that will help you in the markets. The S&P 500 has been going to the moon non-stop, and it just keeps on going. It's actually wonderful at the moment, but it has got itself caught up in this little range here. Sort of got itself stuck into that little range there at the moment. No big deal. No big deal. It is still moving to the upside. What I'm waiting for is for it to break above that resistance, and it'll probably target the 7,000. I expect everyone will go for the 7,000 this Christmas rally and try and hit that round number. Looks like they're going that way anyway. Hello, Fani. Good to see you. Hello, I am Blue Mango. Hi, all. Good to have you on board again. Lovely to see you. I think we did call the NASDAQ the Tech 100. We called it to the long side. There she goes. She broke that trend resistance and she is moving up, but with very small candles at the moment. We might get a bit of low volatility this week. We'll see. Maybe it won't be as exciting. Exciting, though, is that Donald Trump told South Africa, well, our presidency as such, because he doesn't like their politics, that they won't be welcome at the American G20 next year, and they won't be invited. So I was expecting that the Rand would somehow fall apart, but it hasn't. It's held on again. Sometimes you just don't get it. But yeah, the Rand is holding on, and it's holding on with strength. That doesn't actually make a lot of sense to me with the politics between South Africa and America going as they are. I would have thought that this would have taken some pain, but it hasn't. It hasn't as we stand. Of course, South Africa's reply to America was, you can't stop us from coming because it's a group effort. Not America can't make that decision, and you're insulting us and all the rest of it. But yeah, it is what it is. I got my personal beliefs on what's going on in the politics, and I think the Western world is trying to shift the money to a different government. They're probably trying to change the government here to suit their needs a little bit better. That's usually the case. And I think the government that's in power at the moment has stubbed their toes and made all the mistakes they could possibly make, besides destroying half the country. And now they're in trouble. And it obviously looks to me like the world is looking to change governments in South Africa one way or another. And they're normally pretty good at doing things like that. So you can expect a change in the future, near future, to be fair. Okay, so the DAX has also moved beautifully, and it has broken through this resistance level, come back, retested, and shot on up. DAX, wonderful trade. I do believe we mentioned that yesterday as well. We're short in the US dollar, Canadian dollar, which has gone down and is still going down. I'm just waiting for it to get a little bit further before I get out of this trade. I'm still in this trade, so that's fine. Let's just leave it at that. Morning, Gemma, and what do we got? Everybody's good. That's fantastic. Oh, we actually got a few people on the show today. That's absolutely wonderful. I'll get to the whole story of one trading system in a moment. It's really important to understand that there's a difference between system and strategy. Look, it's just terminology, but you need a business plan as well as a system. The charting system gives you the ability to manage your trade. That's all it does. It doesn't do much else. It can't win you trades. It can't predict the future. It can't do anything like that. But what it can do is it can give you the ability to look at what happened in the past, make a conscious decision on what your next move is going to be on that product in the market, whether you're going to buy or sell it or not touch it at all, run away. But whichever you decide to do, you can make the decision based on the chart. Then you can put your business plan into action. You can manage the risk, you can manage the trade, and you can manage how the trade's going to work out for you. And that's the important part, is the actual strategy. But the system is so simple that I'm going to get into that so that you don't have to keep on looking for that magic pill in the market. You see, one thing you have to understand in the markets is there isn't a magic pill. There is no magic pill for charting. There is no magic pill or shiny tool that's going to make you win every single trade, or at least win most of your trades. It just doesn't exist. It's not there. It never will be there. Traders have been looking for the shiny tool since the dawn of time. And now that YouTube's available, and Facebook and Instagram and Twitter and whatever else, there's a whole bunch that has been available for quite a while. Now traders, what they do is they go and look for people like me that are showing you how to trade, and then it works for a while, and then it doesn't work, and you go look for something else, you go look for something else, you go look for something else, and you go full circle. And you keep on going around in circles, coming back, looking for that one thing that's going to make you the money, and then you find out that it's not making you the money, and you just can't seem to grasp why. It's really important to understand that the reasoning behind that is because systems don't make you money. You've got to have a plan. You've got to use the strategy and the business plan that I give you in every single video. That's the only way to actually survive the markets. The system will help you manage your trade. And you want to stick to one system. You don't want to have 250 different systems. You can learn how to use all the other systems, and there's nothing wrong with that. Absolutely. That's a great idea, but don't get caught up in trying to use them all at the same time. And also don't get caught up in changing your system every 5 minutes. Stick to one system, and you might actually get the answer that you need to trading. You might actually find the best way to trade. So today I'm going to show you that one system that you can use to manage your trade. That one system that you can use that'll make you profitable. Well, will it make you profitable? Probably not, because you need the strategy to make you profitable. But I'll show you the system that'll work best for managing your trades. And most of you know this already. Most of you have been here. Most of you have seen it. Most of you have sold the t-shirt a million times, and you know how to do it. And it's the simple support and resistance system, and it's as easy as pie. Now, what I would normally teach from the beginning is go to the day chart, go to the higher time frame, and see what you've got. And if you look at the higher time frame, you can determine from the higher time frame where your main resistance is, where your main support is. And then you can decide for yourself whether you're going to use that. So if you look at this particular product, which is the US dollar South African rand, we haven't traded it, but we're looking at it. There's a support with 2 points on it, rather have 3 points, but it's okay. And there's another, what was a support and also a resistance. Okay, so you've got that level in there. That level already pre-exists. It is there. What you can also see is there is a definite trend down over here. So if you want to put that in, you can. But what I find by putting these in on the day chart is they do tend to be quite out of the way on your 4-hour chart. You'll see now, if I take this back to the 4-hour, it's kind of just a bigger line across the page. So I prefer not to use them as much as you should. But you can look at that on the day chart and determine, look, you're in a bearish trend, and that's where we are at the moment, and it needs to break that. But then I go back to the H4 and I just simply trade on the H4. So now I know where my main support is. I know where my main resistance is close by, and I can work with that. Very simple. I know it's in a bearish trend. I had a look at that now. I saw it. I took the line out the way because I don't want it in the way. What I can see is it's in a range at the moment on the 4-hour, and it's trading off the top, off the bottom, off the top, off the bottom. So what a range is when it's trading sideways. You know, we trade 3 ways. We trade with the trend, we trade in a range, and we trade on breakouts. Breakouts can be on the resistance or support, or they can be on the trend resistance or trend support. Now, the amount of times that it hits this resistance is fair information in that there's liquidity there. There's money in that area. So every time it hits there, it gets pushed down. Every time it hits there, it gets pushed down. That's not to say that every single time that it hits there for the rest of time, it's going to get knocked down, because it's a bit like chipping away at a wall. Eventually, you're going to break through that level, and that's when you get the breakout trade. So that's why, one of the reasons why on the system itself, you're always going to have a 50-50 scenario. So for example, if this comes down to support, hits the support, and it gives you a big candle below that and goes down, it's breaking down. Or if it hits the resistance and gives you a big green candle above that, it's breaking up. That's how you determine if the range has changed, or if it's breaking away from the range or from the trend, whichever way. If it stays within that range and it gives you a green candle off the support and it goes up on the next one, then you can clearly see that it's staying in the range. And if it hits the resistance and gives you a red candle down and keeps on going down, you can clearly see it staying in the range. Now, what a lot of traders will tell you, that you should wait for the retest before taking the trade. I don't do that because, as you can clearly see on this chart, the retest doesn't often happen. It's not something that's common. But it does happen. It does happen in a few cases. I think gold did that now. Yeah, here's gold. It broke through a resistance level. It came back, retested. It's given a green candle to the upside. So that may be a break and retest and go up. Now, if you're going to wait for the retest every time, very frequently you're going to sometimes miss trades. And FOMO is going to set in for you next time, because every time you're going to miss a trade and you're going to think, well, every time I want to take this trade, I actually miss this trade. So I'm not really happy with that. I'd rather not have FOMO. I'd rather take my trades. Now, from my side, I stopped waiting for the retest because my opinion of a retest is this. I get the green candle, it goes up. The trade's 50-50. No matter what happens, the trade's 50-50. I take the trade, it comes back to retest, and then it goes up anyway. So I'm okay, I'm in. It breaks through the level, goes the other way. I've got a failed trade. So I'm not going to trade it. So then I have one of my losses. You know, the point of trading is you're not going to win every trade. This is the issue. Now, break of structure can be, for example, this trend line here. You've got a trend running through. A trend normally touches 3 points. It stays in the trend. You keep on trading the red candle off the down, the red candle off the down, red candle off the down. Then you get a green candle breaks through the trend resistance to the upside. Same thing applies to the other way around, by the way. The other side, you'll have a red candle. But now you've got a green candle that breaks to the upside and it says, we're going up. It's broken the trend, it's broken structure, and it's going to the upside. So now you've got a break of structure and it's moving to the upside. So this is as simple as the strategy gets. So what I've done is I've taken some really complicated systems and I've broken them down into the simplicity of you don't even have to wait for a retest. The simplicity of if it breaks out and it gives you the green candle and it confirms and it closes the candle, then you can take the trade from that level and go. If it stays in the range or in the trend and you get the candle coming off of the level, such as this, then you can take that trade and you can just simply wait for the red candle to close and take the trade. Sometimes it'll fail, go back, retest, the retest fails, goes the other way. You have a failed trade, but keep it simple. Now, the whole point of keeping it simple is this. You trade in a range, you trade with a trend, or you trade breakouts. So those are the ways that you're going to trade. But you're trading this based on the knowledge that you're trading with a strategy that says you're keeping your stop loss the same on every single trade and that you're actually going to win more on your wins, lose less on your losses. In other words, you're looking for trades that are going to work in your favor. You're looking for trades that are going to give you more profit than you're going to take loss. But now you want to keep the loss the same on every single trade. Otherwise, you're going to complicate the issue. So if you're looking for a trade that you want to take, so for example, you see Bitcoin's gone, you've taken the trade, it's gone long. So you think, well, if Bitcoin's gone long, then Ethereum should go long as well. And look what I just did there now. I just deleted Ethereum. So I'll just bring it, another chart. It's not a problem. We'll just put it back on. And crypto, we'll just put it back on. And it's quite easy. And we'll just add it into the system. Okay, there you go. And now you look at Ethereum on the H4. And you say, well, Ethereum should be a good trade. Let's just have a look at a trend. And if you draw a trend line in on Ethereum, you can see clearly that it's breaking to the upside. So with a nice green candle here, you can actually get a long trade looking for 4,000 or whatever it goes to. Maybe that level there, which is a little bit higher up, around 4,250 might be a good target level. So you're targeting 4,250. Now what you do is you say, well, that's quite a decent profit to run for. What would I put my stop loss at here if I took the trade at 3,000? Then I would look down the bottom here and I'd say, well, if this reaches 2,728, then my trade would be invalid. So I have a $100,000 account here. So I shall trade $1,000. I'll risk 1% on every trade. Some of you might want to risk 2%. Some of you might want to risk 5%. Some of you might want to risk 0.5%. Then you say, all right, I'm going to risk 1% per trade on every trade. That's $1,000. So what you do is you work out from the 2028 level, how much is $1,000, how many contracts back to the cost, and you take the trade based on that, knowing that you're going to make far more on your win than you're going to take on your loss. That's how you take your trades. Simple, really. Not complicated, not out of whack. Stop trying to overcomplicate everything. Stop trying to put abbreviations into everything. Stop trying to make everything look like something over-exaggerated. Just keep it simple. Trade between the resistance and the support. Trade in the trend or counter trade the trends, the breakouts. And then manage the risk and keep the risk the same on every single trade. And that is your 1,000-page business plan. 1,000-page business plan, that. Huge, isn't it? No, it's not even 4 lines. It's a 4 or 5-step business plan, guys. It's the easiest business plan in the world. Stick to one system. Trade with the strategy which manages your risk. Keep your risk the same. Make more on your wins. How many lines is that? It's not 1,000, that's for sure. It's definitely not a 1,000-page business plan, and it's not that complicated. Make sure you've got enough capital to be in the market, because if you don't have enough capital, you're not going to double your money that easily. I don't know anywhere where you can take your money and just double it in 12 months. I mean, whether it's $1,000 or $100,000 or $1 million, there's nowhere that you can take your money and double it in 12 months. But somehow, for some reason, there's a whole bunch of traders out there who believe you can take $1,000 and somehow turn it into $100,000 or $1 million in 12 months or less. Doesn't sound logical, does it? Doesn't really sound like something that can actually happen. Theoretically, it is possible, can be done. Practically, because of the fear and the FOMO and the emotions in the human being, unfortunately, it cannot be done. And that's my rant for today. I hope it helps you guys somewhat. And if you have any questions, put them on the chat and we'll chat about them. What the hell? Here we are. We're here for that. Let's do that. Hope you guys are all well. And I hope you guys are at least all making money and doing well this season. And we're heading in towards the end of the year. And as we head in towards the end of the year, it's important to note that you need to have made a profit for the last year. Unless, of course, you're trying to make a profit on a daily basis, in which case you're going to struggle. Noel says, did we make any money today? So did you make any money today? How did your money go? Well, today, I actually turned my portfolio on, or portfolios to be fair, and all of them are green. And just about every trade is green. I don't think I've got one red trade on today. That's insane. It's actually quite good. I got Bitcoin. I got US 500. I got the US dollar CAD short. I got, I got Euro Great British Pound. Gold. Gold is on there. Got a whole number of trades on. All green. All green. Absolutely amazing. What a day. Normally you switch on the computer, most of it's red, or a large portion of them are red. Because as I say, trading's 50-50. You're not going to win them all. It doesn't matter. I don't care how long you've been in the market. You can't turn around to me and say you win all the trades. Nobody does. Absolutely no one does. That's insanity. But yeah, you do want to overall, over the period, try to make more. So, as I've said to you guys before, most of my wins come from just 1 or 2 trades a year, just a couple of trades that make gargantuanly good wins. And then the rest are a bunch of wins that made target, which are great. And then a whole bunch of small losses and small wins, which, why is there small wins in there? Because I move my stop loss up and then it comes back and takes out my stop loss and I go, and then I miss the trade because it bounces and goes the other way anyway. Yes, I'm long on BTC. I actually wanted to go long on Ethereum as well. And then I thought, but it's the same thing, isn't it? I didn't. But yeah, I went long on BTC. Yeah, totally. On a couple of accounts, to be fair. Went long at 80,000 something, 80. No, we went long earlier on, got out, and then I went long again at 83,000 or 84,000, somewhere there. Yeah, on most of them. Yeah, it did quite well. And now it's doing well. And it's going in the right direction at the moment. So I can't complain, can I? It's doing really well. Bit of a gap here though. But if it breaks through that level there, I'm looking at crypto as more of a, it's probably going to try and go back to that 125,000 level. Crypto is a funny thing because in one breath, everyone's calling for it. It's going to 200,000. And then overnight, everybody changes their view and says, nope, it's going to 70,000. So it's kind of weird. But as I told you guys before about crypto, my opinion of crypto is simple. It's based on fresh air. Effectively, crypto is based on fresh air. That's it. End of story. And it's got no asset value like any of the other things. That's two traders trading against each other and deciding the price. And the feeling around it is what makes it. So at the end of the day, the price of crypto is based on what the traders think it should be worth, not what it's worth as such, because there isn't anything to base its value on, is there? Apart from the two traders who say it's worth that. A lot of people are getting into it now, institutions, because they believe that because there's a finite amount of crypto available. So for example, they're saying we're only going to have 21 billion worth of coins. So now they believe because of the finite amount that you should be getting in, because when it reaches that figure, then it's going to become more expensive. And I get the theory behind it, but my question mark surrounds a finite amount of what? In other words, what is crypto based on? What is its, so now you've got $21 billion worth of fresh air. It's great, wonderful stuff. Yeah, but I trade it, of course. I mean, anything that's tradable, I'll trade. Invest in it? No, my investments are stuck in shares. Always shares. I've got loads of shares, and those shares are what will make the money at the end of the day. Okay, so long BTC, but I think at 94,000 my price might turn down again. You're actually quite right, Blue I mean, I can see that at 94,000 there's a strong possibility that it's going to hit resistance here and say, I think I'll turn around and go the other way again. But as David or Donnie says, welcome to crypto, no one knows. And yeah, no one knows. It's a very difficult one to call. And you can really only call it on a technical basis. Think about that. Crypto, you can honestly really only call on a technical basis based on what everyone else is doing and what the sellers and buyers are calling its value at. And they have their reasoning for, making it go up, and they have their reasoning for making it go down. It's kind of strange, and it's difficult to work out. What do I think of the Nasdaq? What do I think of the S&P? What do I think of the Dow? Every single instrument here is a tradable instrument. Whether you're trading Nasdaq, whether you're trading the DAX, whether you're trading the Dow, whether you're trading Forex, whether you're trading commodities, it's all tradable instruments. They're all based on a chart, and they're all based on basically buyers and sellers. Nasdaq's made up of a whole bunch of tech stocks, okay? And 7 of those stocks make it move up and down insanely, right? So your problem with the Nasdaq is if you're new to trading, and most of you, the new traders, will, for some other unknown fathomable reason, end up on 5-minute charts. So you're going to lose because it's extremely volatile. It's tech stocks. They move up and down quite fast. For example, in my investments, my tech stocks are my favorite at the moment because the tech is moving into some insane bubble. But yeah, that's great. That said, though, if you're new to trading, don't pick the Nasdaq. If you've been trading for a few years and you know what you're doing, fine. And if you're trading on the 4-hour like we are, also not too bad because it's okay. But if you want to trade and you're new to trading, rather go with the S&P 500. Now, why do I say that? Well, because the S&P 500 has got all those indexes baked in to it. So it kind of waters it down a bit, makes it a bit smoother, and makes it a bit easier to identify which way the markets are going. And you kind of get a little bit of everything in there. So you got your Dow in there with all your financial stocks from the street and whatnot. And you got your tech in there with all your tech whatnots and what have you in there, and your other indexes and shares and what have you. So it makes it a bit smoother and a bit easier to trade. I've seen some guys who actually trade on the fast trading actually pick S&P 500, Nasdaq, and Dow together, and I find no point in that because they all run the same way. You can't really run one against the other. In very many cases, I also find that the guys that are trading fast try and even throw like S&P, DAX, and FTSE in together. Even that doesn't really make much sense because the index is trying to follow each other. So if you want to do, like, for example, fast trading, then it might be more advisable to choose maybe 3 Forex pairs that are not related to each other or something like that. But indexes are great for normal trading like we do here. You have to remember one thing about indexes, and that is if you look at the S&P 500 for the last 100 years, it's moved up from the bottom to the top. It didn't cycle back. It's not a cyclical product. It just goes up over time. And in between, you have a few crashes where it comes down and everybody literally needs toilet paper, and then they get back in again at the wrong time. And it's like that guy I heard the other day who said, nah, it's easy to turn $1,000 into $1 million because all you got to do is wait for the markets to crash and put your money in at the bottom. I thought, why didn't I think of that? That's brilliant. I'm waiting for the trader that can come and tell me where the bottom is, because that'll be great, because I'll make a fortune. I'm waiting for that guy who can come and say to me, Rob, do you know what? Take everything you own, throw your house at it, throw everything at the market now because the market's at the bottom. There you go. That'll be brilliant, because then you're going to make a fortune. I don't know anyone who can do that, but that guy seems to think there is someone that can do that. I don't know. Brilliant. Aussie Rocks, how's it? Hi everyone. I can see, how's it, World? I mean, I can see that you're quite new on the show, and that's brilliant. Welcome. I'm glad to have you here, but I can see by the questions you're asking that you haven't really watched much of my stuff. Why the 4 hour and not the 1 hour and the 15 minutes? And all the questions are good, and I'm excited that you're actually asking the questions. It's good to ask the questions. But most of the guys that know me well, and they understand that most older traders, people that have been in the market for as long as I have, and that's like 34 years, tend to veer away from day trading and find ourselves in 4 hour and 1 day charts and things like that, trading a bit slower. And my main reasoning for doing it has got nothing to do with the fact that 99% of traders lose on 5-minute trading, and only 75% of traders lose on 4 hour trading leveraged. Nothing to do with that. And I know you all think you're going to be in the top 1% or the top 25%, but you're not. Anyway, you're trading against institutional traders. Now, the first thing you have to understand is that 95% of the market is made up of big money, and it's made up of institutional trading. My personal reason for trading 4 hour charts and not 1 hour or 15 minute or 5 minutes is I don't want to sit and look at charts all day anymore. I can't be bothered with that. But the reason most traders end up trading on 5-minute charts is because they're bored, or because they're impatient, or because they don't have patience, or they can't wait for the trades to come to them, start searching out sniper entries and so on. I can go on forever. And if you want to know more about that, watch my last live show, which I went into detail last Tuesday on 5-minute and 1-minute trading. That was the whole subject matter, and I went into detail on that subject matter. So if you want a bit more detail on that, go and watch that. But my main reasoning for it is I'm not interested in sitting watching charts all day anymore. I got other things that can keep me busy. And one of the main reasons I even have this YouTube channel is because trading is insanely boring. I love trading. Don't get me wrong, I'm addicted to it. But it's also boring. You can't sit and look at charts all day. It's also lonely. You can't sit and look at charts all day and there's no one around, okay? So, I mean, before I started the YouTube channel, there was many years I would play games, I would do whatever, okay, to keep myself occupied around the computer. And particularly if you start day trading and stuff like that, even if you get onto the 5-minute charts and you've got charts running all over the place, you're still not doing anything. You're just waiting to get in and out of the trades. I find it much more relaxing to do my research, get up in the mornings, have my coffee, do more research, decide what trades I want for the day, and then put them in place, position them. I call it position trading, position my trades, and go and enjoy my life, okay, and do what I need to do. So that's, one of the main reasons I've got this YouTube channel is because it actually keeps me busy, gives me something to do, something to enjoy, something to build, something to work towards. And it also creates this community, which is marvelous, someone to talk to. Even though I'm talking and you're not here, I'm still, we're connecting. And that is something that you have to, that's something that comes to you over time. You know, when you start out new, it's all exciting and you want to get into all the flashy stuff and you want to trade on the 1-minute charts and things like that. I get it. But over time, you grow adverse to that. So for me, it's nice to just put everything in place, walk away, leave the trades in place. And then tomorrow I'll look again. During the day, I will look and see, you know, what's happening. Is there anything changing or whatever? Because that's important. But basically everything's in place. And I can come back tomorrow morning and see if there's any new trades I want to add or anything I want to get out of. Usually in the evenings I can check. With technology these days, I can literally check on my cell phone if I'm at a restaurant having lunch or whatever the case. It's so easy these days to do that. I don't have to sit and look at the charts all day. And that dawned on me many years into my trading career, in the sense that I found myself sitting watching charts all day. I found myself sitting trading. And I thought to myself, when I started trading, we didn't even have computers. Imagine that. Nothing, no computers. So when I started trading, pretty much the situation was you had a pen and pencil. And in the morning, I would go and buy the newspaper. And then on the newspaper, I would decide what shares I want to buy. And then I would phone the broker. I'd actually go to the office and phone the broker. So I want to buy this and that and that. And then put those trades in. And then tomorrow or tonight, I'd look and say, oh, that's actually moved to there, because the chart prices would have changed. And we used to get the list of shares in the evening. And then tomorrow morning, I'll phone and sell what I want to sell and buy what I want to buy again. And that's how we traded. So what went wrong? What changed when I had to sit and suddenly watch charts all day? What went wrong? Well, I got sucked into it like everyone else. I got sucked into this rubbish, okay, of watching charts and believing that charts are going to make me money. And then I realized for myself that, hang on, when I started, we didn't do this. That's how we did it, and we were quite successful. This is actually costing me money, all this over trading. So I went back to basics, back to the old way, and back to, what if I changed everything and just went back to the old way? And then at the same time, I also, as you guys know, put the strategy in place, which separates from the charts. Because then I also realized that charts don't make you money. It's a business plan and a strategy that makes you money. Manage your trades, manage your risk, keep your risk the same on every single trade. It was at that point that I realized that I'm not going to sit here and trade 5-minute and 1-minute charts. It's stupid. I'm going to move on. I'm going to position myself just the way I used to in the beginning. And I'm going to have a strategy and a business plan and set my capital and set my risk and understand that I got to make more on my wins and lose less on my losses. Forget about what the charts are doing for you. Start to understand what the strategy is doing for you. And then use the charts to your advantage. Use the charts to manage your trades. I'm really going on off on a tangent on that, but you did ask why the 4 hour, not the 1 hour and the 15 minutes. Deep Sea. Hey Rob, buddy, it's me, Buddy from Montana. And seeing you too, is there help you can offer? Like so many fakes, scammers, hard to trust anyone because I'm old school, just need help. Boom, boom. yeah, it's new to this. Does that help you get on so many nice scammers, hard to trust because I'm old school, just need help. You see, the best way to get around, you see that one I can answer quite nicely. Billy from Montana says, new to this is that help you can offer so many fakes, scammers, hard to trust anyone, and you just need help. And the best way to look at that is you've got to do it yourself, not trust everyone else. But by the same token, take the information that you can from the market. In other words, whatever information you can get from the market, go and get it from the guys, all the different people in YouTube. What I always say is everyone who's giving you information out there, it's all right. Nothing is wrong. All the systems work. But whether they're scammers or not, don't buy anything off them or don't pay for a course or anything like that. Just learn what you can, keep it simple, and take information from everyone, okay? Because all the information that you get from me might not, everything I give you might not work 100% for you. You might need a little bit of something from someone else. You might need a little bit of something from that person and a little bit of something from that person, and you can build your own structure. And you can work with that structure as to how you're going to go forward. What you also have to work out for yourself is, in my case, what do I want to do? Because investing is the obvious way to make money, the best way to make money. In other words, set and forget. Time in the market, not timing the market. You see, what people don't understand is nobody can actually time the market. There isn't a person out there that can actually time the market, which is what gave me the idea many years ago of, your investments are fine, but how do you trade if you can't time the market? And the only way you can do that is by having a strategy of keeping your losses the same, understanding that you're going to lose half your trades, and trying to make more on the wins and lose less on the losses. That's the only way to do it. Follow that strategy, and that's in every one of my videos. That strategy is a super important strategy. And then, of course, just choose one system, work with the system, keep it simple. Like I always said to you today, that's why I brought this up, is that you don't need a system on the charts. The charts aren't going to make you money. In fact, if there was no lines on here, you could just pick buy or sell and manage the trade. And if you took 10 trades, you're going to lose 5, you're going to win 5. It's as simple as that. What you need to do with the 5 that you win is make more on those wins and keep the losses small and get out of the losses quickly. You can't, for example, trust everything you hear in the market, but you can pick out information from every single trader in the market that's out there and test it out for yourself. And I always say, people say backtest. Don't backtest. Backtest is a waste of time. That's what happened in the past. Forward test it. So how do you forward test it? Well, you don't want to risk your money forward testing something. So if somebody tells you that the moon's made of green cheese and you're not quite sure if the moon's made of green cheese and you want to test that out, then the best way to do that is to get yourself a demo and then try it out for a week. Try that system out and see if the moon turns to green cheese if you use that system. And if it doesn't, then it's not working for you. Doesn't mean it doesn't work. Doesn't mean it's not right. It just means it doesn't work for you. That's all it means. So you've got to get to the basics of the charts aren't going to make you money and the markets are 50-50, and that all the money is based on the strategy, and you need capital to trade. You can't double your money in 12 months. There's no such thing. And that's a sure warning sign, okay? If someone's shouting at you, take your $1,000 and turn it into $150,000. That's a set warning sign that something's wrong, that there's a red flag there, because that's not possible. You can't do that. I don't know any way you can do that. And then there are a few other mega warning signs on that, but yeah, the system might work. The system that the person's showing you might work, but you're not going to turn that money into gargantuan sums of money. And another favorite is where everybody is like, oh, I made so much. I made $170,000 today, blah, 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 or I lost $50,000 today. To do that, you've got to have a $500,000 account or $1 million account. You can't do it with a $1,000 account. So what they're doing is making you think that you can take your $1,000 and make $150,000, but you can't. You actually can't. To make that $150,000, you would need to have a $500,000 account, and you would need to be taking a gargantuan risk to actually do that. Keep that in mind. Do keep that in mind. Okay. Dum, 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 dum. Today is Thanksgiving. The market is closed. US market. I like watching charts, but I'm a weirdo. Dave the trader, you're not a weirdo. I used to love watching charts as well at one time. I used to get so caught up in it, but yeah, you know, you need a life as well. Yes, it is Thanksgiving in the US, and I was actually wondering if I was going to have this show today because it's Thanksgiving in the US. But I guess if the guys are on holiday, they might watch a trader like me and be interested. I don't know. Got a question off topic, and I'm sure it's a dumb question, but when you have SMT, do you know which one will, what do you want, or do they both move the same? Okay, got a question off topic, but I'm sure that when you have a SMT, how do you know which one will do? What do you want? I was struggling to understand the question. Just maybe clarify the question a little bit more there on the SMT. Because the beach gets windy and that's no good for one's hairdo. And I think US market is closed today for Thanksgiving. I think you're correct. I use volume profile and confidence with support and resistance. That works for me. Spikes volume at the same levels as at support levels. I love that someone here is actually using volume, because I must say that for me, I gave up on volume because it, you know, it tells you when a move is genuine and it tells you when a move is not genuine and so on, and gives you a little bit of information, but it doesn't really pick the trades for me. So for me, it was just getting in the way on my chart. So I actually took it off because it didn't bother me that much. If I'm really not sure, it's actually really easy for me to put it on. So the way I look at indicators is from my side, I try and keep my charts clean, easier to see. And then the way I look at indicators from my side is it's very easy to add an indicator. I can simply insert an indicator. There you go. And there's a relative strength index, and I can see now on the relative strength index what's happening. Okay, great. That's wonderful. Let's get it out of here and move it out the way. That's as simple as it gets for me. So if I really want to check the volume, if I see a big move and I want to see if it's got volume on it, I can just add the volume quite easy. But yeah, you know, if it works for you, if it's something that works for you, then go for it. Don't overcomplicate it though. Don't go too insane with things like that. But yeah. People don't fail because they don't know enough about technical analysis. They fail because they don't understand what the markets are doing in their minds. And that's a saying I've heard somewhere before. But yeah, it's very much all about psychology, and it's all about fear, and it's all about patience. And you know, forget about the charts. The charts are there for you. These are lovely charts. You know, look at them. They're all pretty. You can have screens all over the wall. You can have fancy things. But these lines that you draw are just lines in the sand so that you can take the trade. But at the end of the day, taking a trade is easy. If you do this on a demo, you learn it in a week. There's no problem. But when it comes to real money, that's where the problem comes in. And where the difficulty comes in is if it's your last money. Let's say you have $100,000. I'll just use it as a round figure. And it's your last money on earth. It's the only money you've got. You don't have anything else, just that. And you put it in the market and you start losing. And you lose $10,000. I always say the fear will kick in. I don't care who you are, the fear will kick in because you just lost 10% of your capital. And there's no coming back from it. What happens when you're losing $70,000 of that $100,000 and you've only got $30,000 left? What do you think is going to happen to your fear receptors? What do you think is going to happen within your body when that happens to you? It's all in the fear. It's all in the way you overcome it. And it's all in the way you trade, which is why I always preach the strategy of keeping your losses small. I always preach the strategy of understanding that you can't time the market, which is why you keep the losses small. And you're going to lose a few trades with small losses. And you're going to determine what that loss is going to be on every single trade, and it's going to be the same. And if it's $1,000 per trade, because it's a $100,000 account, after 10 trades, you would have lost 10% of your account. If you lost 10 straight trades in a row, which shouldn't happen, but if it did, you wouldn't be bankrupt. You'd still be in the game. But that one trade that makes you $20,000 makes up for all of that, doesn't it? And that's why I say, make the wins big, keep the losses small. Don't try and time the market. Just try and manage the market. Just try and manage what you're doing. That's for trading. For investing, you buy Coca-Cola, you buy Amazon, you buy Nvidia, whatever. Buy the companies that you think are going to do well. That you don't even look at charts. Charts are irrelevant on investing, completely irrelevant. You just look at the company and you say, I think that company is probably going to do well. Doesn't matter what the price is. You buy it, you set and forget, and you leave it. And every month, if you feel like it, you can add to it. You can add a little bit more if you want to. That's how we work. Then, do you think Tom Huggard is legit? I do know of Tom Huggard. I have seen him, and who's the guy who used to be his mentor? Passed on. Quite an interesting character. But yes, I think he's legit. He seems legit. I don't see why he wouldn't be. He makes a lot of money, and he's got a high stakes way of trading. I don't know, probably. Who am I to say whether he is or not? I don't know. And it doesn't matter to me, really. Because that's not important. What's important is if you listen to Tom, do you get anything out of him that is of use to you? Will it help you in your journey? Is that information going to help you in your journey? And the only way that you can determine if that information is going to be helpful to you and your journey is if you maybe try it out. Try it out. Try it out on demo. Try it out on whatever. If I'm not wrong, he deals a lot in psychology as well. And try the information and see, does that work for me or not? And then if it works for you, use it. If it doesn't work for you, don't use it. That's how you work. That's how you operate. You don't try and determine, don't spend all your time trying to determine who's good and who's bad, who's legit and who's not legit. When you went to school, okay, and a teacher walked into the maths class, or walked into the English class, or whatever subject it was, the history class, whatever, okay, you didn't say, excuse me, ma'am, excuse me, sir, could I see your qualifications? I want to know if you're a good teacher or not. How many people have you taught over time? Are you good at that? Are you good at teaching children how to do maths? And do they do well? Well, no, I just got employed by the school because I did a teaching degree and here I am. Doesn't necessarily mean I'm good at maths, but I've got a teaching degree, so I'm good at teaching. You know, that's why I say to you, take the information that you get and determine whether it's working for you. You have to use your own brain and figure out if that's the information that you want or not. I mean, there was many times that I sat, for example, when I was at school in a history class, and I used to think, well, that's not the information that I want, because they were just feeding me dates, like this date of that and the date of that. Remember this date, remember that date. I was like, what's the point? And then in later years, I fell in love with the history, but not with the dates, more of the stories. But they weren't showing me the stories. They were showing me the dates. So for me, that information was worthless. What I wanted was the stories. That was more important to me. So pick out what's important to you, what you enjoy, and what you like. Nobody's feeding you false information. Everybody's feeding you what they believe is correct for them. Everybody's telling you what works for them or how they feel about things. Don't spend all your time worrying about is Tom legit, is Rob legit, is this person or that person. You're wasting your time completely. Just take the information that you feel will work for you and use it. Use it to your advantage. And if it doesn't work, go, that didn't work. Try something else. Try something different. It's not going to change the world, but it is going to, you'll absorb it. And the more things that you find out in the market that are maybe wrong, the better. Because you'll learn from that. You'll learn from those mistakes. Believe me, trading you don't learn in a day. It's going to take you a couple of years, and you're going to get the feel for it, and you're going to learn, and you're going to make mistakes. Everybody makes mistakes, and believe me, all the traders make the same mistakes. They all make the same mistakes over and over and over again. No matter how many times the trader tells you don't do that because I've made that mistake before, you're going to still go and make that same mistake every single time. Dave says, do you make lesser money if you do the 4 hour with the 1% risk management as you do have much lesser trades on the 15-minute, for instance? The question should be rephrased as, do you lose less money if you do the 4-hour charts with 1% management as you do with the lesser trades on the 15 minutes? Look at it from that perspective, okay? No, you have to understand the difference between a 4-hour and a 1-minute chart, okay? And we did this in the live show on Tuesday, quite length. And that is, if I put a risk in place on a 4-hour chart, it might be 100 points away, my risk. And I got plenty of space. And if the market's open and they jump up and down, it's not going to take my stop loss out. I'm going to stay in the trade. And over time, it's going to reach my target and make me a larger sum of money. And I'll be targeting an amount. Let's say I risked $1,000 and I'm targeting $4,000, okay, on a couple of 100 points, say 400 points, and I'm risking 100 points. That's how the 4-hour works. But on the 5-minute or the 15-minute, let's say the 5-minute, there I'm risking 10 points, not 100 points, 10 points. And I'm risking $1,000 on those 10 points. So yes, if I make 40 points, I'm going to make $4,000. But how many times do you think it's going to hit my stop loss when the market opens or changes or whatever the case? Because the market on 10 points is just going to go and swoop me up. And that's why most traders lose on those lower time frames. So the traders say, well, okay, I'm not going to risk the full amount because I'm on a lower time frame and I keep getting wiped out. So I'll risk smaller amounts. I'll start with 10%. But that doesn't work either, because when the market goes in your favor, you only make 10% of the trade you wanted to win. And when the market goes against you, you start dollar cost averaging down and then you lose more money. So that doesn't work. So no, you don't lose or win less from the 4-hour charts. You just have bigger trades. That's all. You're more comfortable with bigger trades. You're more comfortable with risking the higher amounts on a slower time frame, knowing that you've got more room to maneuver. For example, the Bitcoin trade is a good example of that. So you take the trade at 80,000 and you think, well, Bitcoin was at 125,000 the other day, and how low can it go? Well, it can go to zero, of course, but in general, maybe it'll go down to about 75,000, 74,000, you don't know, okay? But I've got a chance of it reaching 125,000, which will give me a gargantuan win. So in other words, I could risk $1,000 in Bitcoin with the possibility of making $7,000 or $8,000 on it. That's the type of difference. Whereas on a 1-minute chart, you might not take that sizable trade. You might need to take 10 trades for the price of one. So think about how you want to trade. But most people lose on those lower time frames because they get taken out quickly. So That's the big thing. It's impossible to time the market, and that's where the difficulty comes in on the lower time frames, is because you're trying to time the market and you can't. You can't time the market. So what are we doing? We're doing time in the market. We're just not doing 30 years here. We're just doing a trading time in the market. In other words, I'm giving myself a little bit of room for drawdown. I'm giving myself a little bit of space on the stop loss so that I can stay in the trade and then try and make that target. That's the room you get from the higher time frame, and then you just make a bigger trade. That's all. Just on those, Dave, you know, that you're probably looking at that is because those funded accounts that I got that I play around with for you guys, those have got low amounts on them, right? So they got smaller amounts, like $25,000 and that type of thing. It was just to show you guys how to trade, and also to show people how to trade in a more realistic environment of money, rather than putting $1 million accounts there and saying, oh, look at this, you can risk $100,000. And then, you know, most people don't have that kind of money lying around, and then it just, it doesn't make sense to them. So I put those accounts together specifically for more educational purposes, so that people could understand the smaller amounts and how difficult it is to actually make money in the markets. I'm just using my original charts here at the moment because I actually prefer them, and I find my concentration being taken away from the main accounts with those funded accounts. So I'm just trying to reconcentrate on some of the main stuff. Okay, so where was I? Charlie Burton, where he said you didn't experiment over 1,000 trades. Only rule was every trade had a risk-reward ratio of 3-to-1. He picked direction by flipping a coin. He had a success rate of around 50%. So your statement that the market is 50-50 is true. Yeah, look, it is. It's true. The market's 50-50. The charts are 50-50. Everything you do in life is kind of a 50-50. What you want to do is do the risk to reward, make more on the wins. That's what the turtle traders were doing with their breakout trades, and they weren't winning 2 or 3 trades out of 10. I mean, they were making a fortune. It's all about following the wins and not the losses. Every single trader that I know will have followed a loss at some stage. Everyone, including myself, will have followed a loss, believing in that trade for whatever reason. Dollar cost average. I don't know a trader that hasn't dollar cost averaged. And if anyone says they haven't, then they either started trading yesterday or they're lying. Okay? Every single trader has dollar cost averaged. Every single trader has moved a stop loss. And if they tell you they haven't, they either started trading yesterday or they're lying. So, yes, we've all done it. We've all been there. We've all made those mistakes. And once you've made those mistakes, even though people told you you're going to make those mistakes, then you realize, oh, hang on a minute, you know, and you get over it, and then you start to move forward. David Paul was Tom's mentor. Tom is 100%. Yes, David Paul. David Paul was an excellent mentor, and he had a lot of good information. He was really good and quite decent, I have to say. And he was Tom's good friend, if I remember correctly. Yeah. But yes, no, I do believe that Tom is a high stakes trader and he knows what he's doing. But it's not for me to say that he is or isn't. I don't know him personally, and I wish I did, but I don't. And yeah, you know, why would you say he's not? You know, it's like everyone is actually. Let me put it this way: there's all these traders out there, and there's all these guys out there trying to determine whether the traders are legit or not, okay? And why would they not be? I believe that every single one of them actually is, in one way or another, okay? Why wouldn't they be? They know how to trade. So if you know how to trade, then you're a legit trader. Even you are a legit trader, because guess what? You're trading, even if it's with $10 or $500 or $1,000 or $1 million or whatever you're trading, whether it's just a funded account or whatever the case, you're a legit trader. You're trading. So why can't you call yourself a legit trader? Why aren't you a legit trader? I mean, does trading for 34 years like myself make me a legit trader? Does making a profit or making a loss make you a legit trader or not? You know, it's just, it boggles the mind how people think. Okay. If somebody knows how to trade, they know how to trade. If they don't know how to trade, they don't know how to trade. Simple as that. There is no two ways around this. Okay. Like I said to you now, when you went to class, when you were a kid and you went to school and a school teacher walked in, did you ever question whether they were going to teach you the correct maths or the wrong maths? No, they're showing you something that they know. They're passing on some information that they know to you. How you use it is entirely up to you. It's got nothing to do with the teacher, and he probably couldn't care less anyway. He just wants to get paid at the end of the month and see that his class passes so that he can keep his job. That's all that matters to him at the end of the day. At least we do this with a bit of passion as traders. We put it out there because it's something we love to do. It's something we enjoy, and we're passing on some information to some good friends. But yeah, I find it quite mind-boggling that people question. And yeah, look, I sit here and say I do believe that, for example, Tom and Paul and all of them are also legit. And it's got nothing to do with me whether they are or not. Book is brilliant for new traders figuring out fear. Yeah, I think new traders should actually watch that. But what I would advise against is be very careful of when you see someone achieve something extremely risky and successful, as Tom has, be very careful of when you do it, okay? Because you don't have the same mindset. You don't have that same fear threshold. You don't have that same way of looking at things, okay? You have to be very, very careful of that. You might try the same thing and find yourself in shock, okay? So do be very careful of how you go about it when you deal with things like that, and test it out for yourself before you get involved. You know, test things out and see, does this work for me or doesn't this work for me? But like I say, it really doesn't matter. And Aussie Rock says, yeah, listen to everyone and work it out for yourself. Trust no one. I mean, it's not about trust. You're just trying to get information, and the information's out there and it's available to you. You know, if I'm looking for information on anything, I want to put a bolt in my car, or I want to get a set of headphones or whatever, you know, where do I go these days? These days I go straight to the internet. I go and have a look at what other people's experiences have been, and you get some information. You collate it and you put it all together. I mean, when you buy online, you look at the bottom, there's a whole bunch of reviews. You look at those reviews, and most people actually look at those reviews and make a decision based on those reviews, what they said. If the people said it's a load of old rubbish, then they won't buy it. If they said it's a really good product, they'll go and buy it. But you don't even know these people. You've never seen them in your life before. You don't even know if they really exist. But because they said it's a fantastic product, you're going to go and buy it. It arrives at your house, turns up in a box, and it comes from Temo, and it's this size instead of this size, and you think, what the hell? Yeah, you know, that's why I say to you, work it out for yourself. I prefer zones rather than lines. Morgan Doug prefers zones rather than lines, and that's great. And very often you'll see on my charts that I like to draw zones. Okay, I like to draw the zones in and what have you. You know why I put lines in? Because I'm pretty lazy. I just like, oh, there's a level, line, because I don't even need lines on a chart. I look at a chart and I say, oh, that looks like a buy. I can see the levels. I don't need the lines there to see the levels. And I draw them in a lot so that you guys can see them at the end of the day. But I look at the chart and I think, yeah, that looks like a good buy. I actually, without drawing them in, I can see the zones, I can see the levels, and I'm just lazy. I just don't draw them in. That's all. You know, for example, there was a big zone up there, and I didn't draw it in. What for? There's a little candle there. Ooh, that looks ominous. And that came down. Yeah, there's a level there. Yeah, there's levels all over the place. You look at it and you can really confuse yourself. You can draw millions of lines, and I've seen some traders' charts. Wow, there's line after line after line after line after line, and I think, ooh, what level are you looking at? No idea. Yeah, it becomes quite confusing sometimes. That's why I say everyone has to work out their own system at the end of the day, what works best for them. Because some people like a million lines on their charts and other people don't. Lagging indicators are a big thing. Moving average crossovers, things like that, big lagging indicators. So you only make this much when you could have made that much when. But that's charting. It really doesn't matter. They're all work. They're all correct, and go for it. Just on one note, I have to say that you have to be very careful when you, because you were talking about Tom just now, that he deals in high stakes trading and takes a lot of risk. So, if you are gonna follow that, just make sure that he puts a lot of research into it. Puts a lot of research into it. It's not just, I'm going to start trading today, I'm just going to trade $1 million. It doesn't work like that. There's a lot of research gone in there, and go and learn that system if you want to and see if it works for you. Go for it. Yeah, learning how to deal with the losses. That's what creates that winning mind, as Daniel says here. You got to learn how to deal with the losses. That's the important part. Yes, I'm long on Bitcoin. Happy Thursday, Elaine. Good to see you. Simple way to discern which the real one shares the losses to. Black ones will only show you the wins and sell you a course. The real ones make money in the markets, not on extras. Like I say, Daniel, it really doesn't matter. And as long as someone's got something interesting to show, so be it. If it's worthwhile and there's some information, grab it, run with it. That's good. There's no problem with that. Today was actually a nice day. When I opened a couple of the accounts, there's just green on the accounts, really nice. That's actually really, really, really nice. Let me just... Good. Okay. Perfect. Dum, dum, dum. Cool pictures there, Daniel. Yeah. But yeah, I don't know, these charts are it's just easier for me to run here because this account's been running for many years. Okay. Brent crude oil. I'm still long on Brent crude oil as well. That one's actually in a profit now as well. It's actually quite interesting. It's going okay. And the DAX, we called this earlier in the week, going up, and there she goes. Beautiful. Nice run. Really nice run. It's quieting down for a second. I've been talking for an hour and 15 minutes flat. Surely you guys get tired of my voice. Constantly, yeah. Gold, yeah, I got my feeling on gold, but the way I look at gold is what it's doing. It's broken to the upside, and it broke up nicely. So as I said this morning, I don't know if you guys saw, but it broke to the upside nicely. Off she went. It sort of hit the resistance, came down, and then it broke through the resistance. We got a breakout. And you guys know that I don't wait for retest. I generally don't wait for the retest. I will normally just buy. And you would have bought gold on this green candle here. But then we got this retest immediately after. So it's kind of like I came in late, so I didn't see it, so I didn't buy it, right? It's happened to me a lot with gold this year. I don't know why. I've missed gold a couple of times, but in this case, I missed it quite happily because it retested, it went back, and now it's sitting on this, what was a resistance, and is now acting as a support. So what it does, it comes back, retests, tries to go out again, but it comes back again. So what you've got to wait for here, as far as gold goes, is just a nice big green candle to the upside, a solid green candle, close, buy, and she'll run. Because if you get a green candle on gold to the upside here on a run, it'll definitely run because it's had this retest and it's going up. So it looks good. The other way you can do it, you see the breakout there? That was the breakout. So now we can move this and just say, okay, so what's it going to do next? You know, what's its next move? Now you could go all the way down here, but I'm just going to have a look at the quickie. And that is for me sort of very much confluence on that resistance line. If it breaks through this trend support and goes to the downside, she's going to go short and she's going to come and fetch this money all the way down here at 40.50. And that's okay, so we haven't talked about supply and demand today. And the main reason for that is I didn't want to confuse the issue. That's why I tried to keep it to one simple system today. That's what I talked about at the beginning of the video. Beginning of the video, I said most traders fail because they overcomplicate it. They get too involved in too many different systems. So I talk about the one system that we can use. But if I was going to, sometimes I, from my personal perspective, throw the extra in and I use a bit of supply and demand. And the reason I do that is because it's just handy to see where there's some liquidity in the market. Sometimes I'll even throw an RSI in because all the pros use RSI anyway. But yeah, so there's a demand of money here. How do I tell that the money's here? It's very easy. I've got more than 3 strong green candles walking away from this red candle. In other words, there's actually 5, but you only need 3. And it walked away from this red candle beforehand. That's where the money lies, okay? Normally, and the opposite way around for the other way. So if this comes down, breaks through, it'll probably come down, try and pick up this money at 40.50 and go back up again. If it breaks through that, it's breaking solid through the money, then you must know this thing's very short. So yeah, that's kind of where we are with gold. Gold, you're just going to have to be patient there, dude. You know, you have to be very patient on the gold. Don't get too excited about the gold. Just be patient. Just wait for it to come to you and give you the information that you want. You can't force a trade. Let the trade come to you. So what I would say, it's going to go either way. It's 50-50 right now. You can't take a trade. Wait for a green candle, wait for a red candle breakdown, take it one or the other way. Then you'll know what you're getting. No, this is my old MT5 account. I'm just using it because, like I said, I've got to get my focus back onto my real stuff. I've been playing around too much with all this funded stuff with you guys, and it's messing my head around a bit. So I'm just trying to simplify my life a bit and just work on my main accounts. Okay, but we'll still keep those accounts. Don't worry, they're still there. Still trade them in the background and whatnot. Maybe we'll even have them on the shows a few times, but yeah, I'm just trying to simplify my life a bit. Okay. I don't see, why don't you use TradingView? I actually use TradingView quite a lot on many of the other accounts. You guys would have seen them in the videos. Maybe you haven't seen my other videos, but this old account is MT5 because it's supplied by my broker, and I'm happy with that. Okay, I don't need millions of indicators, so it doesn't matter. But yes, we do use TradingView on lots of the other accounts, and it's there. Many other guys here have been working with me on TradingView quite a lot. Gold must go above 41.70, otherwise it's up, down, tunnel. Yeah, I would say just a nice green candle to the upside, and you got it if it closes, or a red candle to the downside, and you got it if it goes the other way. Don't want Bitcoin to turn against me now, because my stop loss is at cost on that one. Okay, don't need that. And then Brent crude oil, that's going in the right direction. US dollar, Canadian dollar is going the right way. That's fine. Yeah, well, sort of. Yeah. Okay. Also think that 41.79 level is important for gold. Yeah, you are right. You know, if it breaks past that prior high, you can go for it effectively. Nothing wrong with that. Is it 41.79? 41.73? Yeah, on this chart, 41.74. 41.75. Breaks above that, you're good. Good to go. Definitely. Looks good. The thing is, I see you saying good deals on TradingView. Now, for all you guys that are new to trading, all you guys that haven't been in trading for a long time, understand one thing. In my personal capacity, I have never once paid for a charting package, ever, in my life. It's always been given to me by the broker. Now, whether that's got to do with the amount of money you give them or what, I don't know. But as far as I know, every single broker will give you the charting package that you need to trade with. So all the TradingView packages that I got for nothing. All of the MT5 packages that I got for nothing. All of the other stuff is for nothing. It's given to me by the broker that I'm trading with. So you don't need to buy a trading package or a trading charting package. It'll be given to you by your broker, and it's good enough to trade with 9 times out of 10. If you're not happy with a charting package that your broker's offering, then get another broker that offers the one you want. Simple, really. There's plenty around. Just choose a broker that's close to you, close to your area, close to your home, in the same country as you, etc. And work with them and work on that. And you'll be okay. Yeah. Strange, but true. Okay. Give me 1 second, guys. I'm actually going to just close the window behind me. Oh. Did that so you can't see me walking around. But yeah, because it's rattling in the wind. The wind has come up here in Cape Town again, and it goes down and then stops and everything seems to be fine. And then boof, it comes back again. It's like sanity. But I don't mind because it sometimes cools things off a bit. But we're in summer now, high summer, and it's really hot here. Really hot. Yes, I use a South African broker. I am Blue Mango. I definitely use a South African broker. Most definitely. The one I've used for the longest, forever, is GT247. And I don't like to name names, okay? I shouldn't be doing that. Definitely not. But anyway, there you go. In the UK, they're known as Purple Capital, I believe. But I think they still have the GT thing. And then they also have an easy equities thing in South Africa that you can attach to, which you can actually buy shares on an investment as well for a very low fee, extremely low fee. And you can buy portions of shares and everything for those people who don't have the money. And it's a really great thing. It's fantastic. For that, I think I did leave a link in the description for you guys. Really, I think you guys get 50 Rand or something stupid from it. It's really not, it's not going to make me any money. But for you guys, it's probably great. I did that because a lot of guys asked about brokers in South Africa and whatnot, and they've always treated me well, and I've never had problems with them. Okay. Trip beats. Hi Rob, first time, yeah. What's the NAS doing at the moment? As I said earlier, you know, NASDAQ long, we called it long and it's gone long because it's broken this trend resistance here, right? Gone to the upside, which is brilliant, absolutely fantastic. But for the new traders, I wouldn't recommend trading into the NASDAQ, rather trade into the S&P. The S&P is a little bit easier and flows a little bit better. But what I like to do is just look at what the S&P is doing with regards to the NASDAQ as well. So if you look at the S&P 500, it's actually hitting a resistance level at this 6888. I'd like to see it break through that. Probably target the round figure of 7,000, because as I always tell people, round figures are quite important. People like round figures. So they're probably going to try and target the 7,000 on the S&P, which will give you the NASDAQ to a probably level up here, 26.7, probably going to try and hit that resistance there. I expect it'll keep going up. I expect it'll probably go up to that, but you know, it's 50-50. Markets, you can't predict, charts can't predict the future. I can't predict the future. You can't time the market. All we can do is manage our trade. So for me, managing this trade is simple, and that is get into the trade, all right, taking the long trade. Now 24.5 is kind of where the stop loss is down here, and then the take profit. But for me, the take profit is really high. It's actually, I'm looking more at the 26,500 up here. You know, there might be some profit up there. I'm hoping that it breaks and goes to the upside, because what I'm looking at for the NASDAQ is if the S&P 500 targets 7,000, you can see it's above that resistance, then the NASDAQ is going to break above that resistance as well, and it's going to go for a higher target. And that's what I look at for that. But bearing in mind that that's all in the tech stocks, and depending on what happens with the tech, just remember, if you are trading the NASDAQ, you're only trading tech. So, you know, if one of those top 7 companies like NVIDIA or something like that comes charging down, you're in trouble. So just keep that in mind. So manage your risk, follow the strategy. That's the most important part about trading. Manage your risk, follow the strategy, and you'll be okay. Don't try and get married to a trade. So don't get married to the NASDAQ, that's for sure. But yeah, NASDAQ is bullish. Do you know if the US markets are closed tomorrow too? Okay, good to know. Thank you. You know, Daniel, the markets might be closed or closed tomorrow, but they're kind of open, right? So what I find with markets like this is they don't have big movements. Of course not. They don't have big movements, but they have movement. And what I find happening in that movement is, and especially like over Thanksgiving, over Christmas and that type of thing. Now, I live in South Africa, so I have to figure out when these holidays are. But I call it holiday traders. The holiday traders come in and they start trading. And very often it'll be new traders. New traders come in and they start buying. And yes, market's open half a day tomorrow only. NVIDIA, thank you. As far as NVIDIA goes, that's one of my favorite investments, by the way. Wow, I love that share. Why? Because it just makes so much dosh. I don't trade it, I own it. I just invest in it, and as much money as I can make, I invest in it. When I go to the markets and I look at all my shares and I think, which company am I going to add to this month? Let's have a look here. Oh, NVIDIA. Just throw it all in there. So look, if NVIDIA crashes, I'm probably going to be sad. But yeah, as it goes at the moment, one of my favorites, all-time favorites. But yeah, as I was talking about now, Daniel, really important to note that in times like this, when there's holidays and everybody's like sitting back and they're on holiday and you think nobody's trading, markets are open. So you get holiday traders, you get guys that come to trading for the first time. Now, these types of people are usually people that are at work during the day or at work during the week, and they're not trading. and now they're on holiday, so they got something to do. And maybe they're looking towards a retirement. Maybe they're thinking they're not going to be working next year. Maybe they're looking for a way to find some freedom. Okay. So they start looking at trading, and they unfortunately have watched a few YouTubers showing Lamborghinis and money falling out the sky and that sort of thing, which doesn't help. But okay, they get into trading and they start dabbling and they throw a few coins at it and see how it goes. And then you get these traders coming in, so they're all kind of buying. But what's taken out of the market at that point, important to note, is the big institutional money. So the institutional money kind of stops dead or goes into skeleton stuff. So there's not a lot of massive trading going on amongst the institutions, but the markets are still open. So all the retail traders are now sort of running the market. So when that happens, you get this sort of slow swoop to the upside, which is why you often get a Christmas rally. It's not big money, it's small candles, but it creeps up. And that's just my opinion, by the way, guys. I mean, I could be completely wrong and talking complete rubbish to you, but it's just the way I see it. And I've seen it over many years, and I just know that that's basically where it comes from. For sure, that time is not a bad time. It's not a situation of, oh, it's holidays now, everybody's gone. Those people that are on holiday, so many of them are looking for something new, looking for something to do, and they come into the markets and they start trading. And it kind of, the markets keep ticking along and they keep going up and down. They just don't go up and down at the same rate, because the institutional traders are on skeleton staff. They're not closed, they're on skeleton staff. They're not all there because it's a holiday, right? That's what it's about. Okay. Rob, did you see Michael Burry shorted NVIDIA? He says the depreciation of their chips are calculated wrong and they use clever accounting techniques. Well, I'll tell you what, if Michael Burry shorted NVIDIA, then I'm going to buy more. I'll just go long. You know, he must go down as the luckiest trader in the world. Do you know how bankrupt he was when he hit that big short? He was gone. He was gone. What he did was the deep pocket theory. I call it the deep pocket theory. And the deep pocket theory is this. You look at Bitcoin and you say, I believe Bitcoin's going to go to $200,000 because that's what I believe, right? Well, actually, I don't, but I'm just saying, let's say I do. Okay. So now I'm saying Bitcoin's going to go to $200,000. So no matter what happens, I'm going to throw the kitchen sink at Bitcoin here at 90,000 and keep throwing the kitchen sink at it until it works out for me. Get what I'm saying? It's called the deep pocket theory, in my opinion. That's what I call it. So in other words, no matter how low this sinks or how far it goes, I believe that somewhere down the line, it's going to get to 200,000. And that's exactly what he did, only the other way around. He went for the big short. So he would have done the, let's say the NASDAQ, right? So he would have said, the NASDAQ's going short. Well, he would, because NVIDIA is going to go short. So he's like, NVIDIA, okay? So I'm going to short it here at 25,261. And no matter what happens, I believe that this is going to go to 15,000 or something equally ridiculous. And then he'll stay in the trade. This thing will go past 30,000, then he'll stay in the trade, which is why I say he's either the most fearless trader or he's the luckiest trader ever known to mankind to have had that crash come around in 2008. There is another theory that I have that he probably knows the cycle. And what I've regarded as the cycle, my cycle is around about every 10 years, there's a crash. What I call a crash. A crash is a strong correction, like 30, 40, 50%. serious move, you know, goes from 6,800 to 4,000. That's pretty much a crash. Okay. And from what I've seen in the markets, it's not exact, but on average, about every 10 years, you get this move. So maybe he worked on that principle. I don't know, but he did. If he did, he got it wrong by a couple of years because he sat in the red for a long time. And then the crash came and he walked away with his name in lights. Okay. I still say the luckiest trader ever, because I think if he'd gone for another 6 months to a year, he would have been gone. I don't think he would even have lasted that long. To be fair, he was so down, so in the red, and so many people's money as well. He was in big trouble. Serious trouble. Yes, he says he called it. He called the housing market, and that I don't think he did. I think he just took the short because the markets was in the supermarket mentality. The markets were so expensive. He decided to take the short. Actually surprised. I mean, Michael Burry would be the one who would be. I don't know if he is. I haven't checked, but he would be the one that would probably be short on the markets right now, on this market, because this market's run so hard. So he would probably be gambling on this being a short, in all likelihood, I would say. I don't know what he would call Bitcoin. But yeah, I expect nothing less from him than to short NVIDIA and to believe that it's a whole load of rubbish. Oh well, okay, if he says so. For me, an investment is a set and forget though. I don't trade my shares anymore. I used to, but I don't anymore. My shares, I buy them and I keep them and I add to them and I love them. So, you know, if I take my average cost in NVIDIA, which is below the 100, I'm quite happy. So yeah, it's okay. I'll be really unhappy if it goes his way, but it probably won't. There'll be some corrections, but DAX is making a move. I think Euro 50 could be a good trade. DAX is making a move. Dun, 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 dun. See here. Dum, 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 dum. Yep, well, it did break out, so it does look rather interesting. I gotta say, it does look rather interesting. So yeah, I think it'll probably go, let's watch this high here, 24,000, probably go all the way to 24.5. DAX is looking good. DAX is looking lovely. Probably got to do with opening of the markets, so just keep an eye on that as well, because let's see what the Nasdaq's doing. Not much. Interesting. Maybe Michael Burry is still shorting NVIDIA. And then S&P 500 is also not doing much, but that's Thanksgiving in America, of course. But like I said, I put it down to the holiday traders. So you'll see that a lot over Christmas. There'll be a lot of holiday traders trading in the market, so you can pretty much enjoy that. For those of you who didn't join us at the beginning of the live show, who came in a little bit later, just watch the story that I gave you in the beginning, where I talked to you about mastering one trading setup. Because, like I said, most traders fail because they overcomplicate everything. So I spoke to you about the setup that we use. So watch the first 20 minutes of the video and you'll get the concept. And that's important. And then if you watch the live show from Tuesday, you'll get the concept on the 1 minute and the 5 minute charts as well. So every single live show, I'll give you guys a little bit of information or training in the beginning of the video, a little bit about something, you know. It's important so that you guys get something out of these live shows as well. It's not just about me. It's not just about trading or anything like that. I'm not here to boast about how much money I win or lose or how many trades I take or anything like that. I'm here to show you a little bit about trading if you're interested in that. So I'll give you a little bit of information at the beginning of every show, first 20 minutes or so, and then the rest of the show I talk rubbish like this. So if you can handle that's great. Just remember, fear and FOMO destroys traders. What destroys a trader? Fear and FOMO. That's what takes you down. What takes you down is fear and FOMO. Do you want to get over the fear and FOMO? Here's a little trick that I use. That is, I don't sit and watch charts all day. I don't sit and watch the ups and downs. What I do is I take my trades, I position my trades, and I go. And I leave them. And then I leave it to the gods. And then I come back, and then we'll see what happened. And in some cases, it's good, and in some cases, it's bad. I just love it when I open up the charts, and it's all green. And, look at that. That's lovely, isn't it? Best feeling on earth. This Ethereum, I was looking at it earlier and thinking that it looked like a reasonable long trade. Starting to change my mind here, but no, it's it could be that it's just breaking out and coming back to retest, eh? But yeah, it does look a little bit ominous. Very undecided there. Yeah, a bit bearish. Okay, look. Yeah, you get this long green one comes out. Yeah, those candles don't look very positive, but you get this retest. It might just bounce off this and head on to the upside. And then we've also got this little move. I'm just going to draw it in here, along here. So that could be ominous as well. It could be running along there and bouncing to the upside. So Ethereum might not be the worst trade in the world. It might actually still play out for a long trade. But I didn't take it because I've got the Bitcoin long. Now, having the Bitcoin long, I mean, what's the point of me taking the Ethereum trade? Crypto, it's the same thing, isn't it? This broke through nicely. I'm just going to actually do this again as well. I know too many lines, but I just want to see how... See, this one's quite far away, whereas Ethereum is right on the money. So if you're looking for a trade, I mean, how low can Ethereum go? But yeah, maybe you can get a decent trade out of Ethereum. That might give you a run to the upside because it was at 4,500 the other day. It made me some money, Ethereum. I'm not a big crypto fan, but I love it when they make me some money. Then I called this short earlier. So we're short on this. It went back, retested, and it's coming down. It's going short, guys. This guy's... Look at the big head and shoulders at the top here as well. Ew. So this looks pretty short. I think it's going to go. And then it's going to come pretty far down. If I look at the level 86.8, it's going to come down quite far. Oh, it could come down to here, 87.2, and then get down to 86.8. But yeah, she's heading down. So that's another trade one can look at. Doesn't look too bad. Trip beats. I see you like to trade the 5-minute charts. You see, I've traded the 5-minute charts. I've traded the 1-minute charts. I've traded the 15-minute charts. Traded them all. But I eventually settled on the 4-hour charts. And why? Because it's relaxing for me. Because I don't have to sit and watch charts all day. Yeah, and because I'm not in a space where 99% of the traders lose. I'm actually in a space where 75% of the traders lose. So yeah, it's a bit better. But that said, it's slower, it's easier, and you just play with bigger amounts. 5-minute trading, you must remember you're trading with a very small sample size. And another way to equate it is if you invented the most amazing business and you wanted to know if it's going to work, let's say it was a program or something to that effect, and you put 1,000 people in a hall and you said to them, check this out for me, tell me what you think. 800 of them come back to you and say, do you know what? That's a great system. 200 say, don't touch it. It's rubbish. Okay. So you've got a good sample size. I equate that to the 4-hour charts. The 5-minute charts I equate to if you invented that same program or business, but you put 5 traders in a room or 5 people in a room and said to them, tell me what you think of that. 3 of them come back and say, oh no, that's great. 2 of them say it's rubbish. It's not a really good sample size and you haven't really got good information. And that's how I equate the 5-minute trades to the 4-hour trade. So for example, on a 4-hour trade, if I'm putting in a stop loss, I'm going to have it 100 points, 200 points away from my cost. I got plenty of room to maneuver. The markets can open, close. The Fed can have these speeches, whatever the case, and it'll move up and down and I'll still be in the trade. And I'm looking for a wide berth of profit. It might take a bit longer, but I'm waiting for that wide berth of profit. Then on the 5-minute charts, I've only got a 10-point stop loss. They open the markets and woof, it's gone. You know, if I'm wrong, I'm getting taken out of the market far too often. So what I find is on the 5-minute charts, number one, I don't have the biggest selection to choose from because I have to narrow it down and I have to concentrate on it because it's really fast. So maybe choosing 3 or 4 products to trade on. And also, with the 4-hour charts, I can take many more trades and just leave them in place and enjoy my life. Now, I've heard many a person who trades on the 5-minute charts come to me and say, but Rob, I go in, I trade for 2 hours, and then I make a couple $100 and I go to the beach, okay? But that doesn't work. It never works. Believe me, I tried it. I've been there, done that, sold a few shirts. No, it doesn't work because you come in, you work for 2 hours, and instead of winning $200, guess what? You lose $400. So now you think, do I go to the beach and leave my $400 loss? Or do I stay here and trade for another 14 hours trying to get it back and lose another $400? And then tomorrow I come in and I start $800 down rather than $200 up. So what am I going to do today? Because I need to make that $800. I start taking risks because I want to make that $800 back because I lost it, and it all just goes pear-shaped, you see. So that's why I don't trade on 5-minute charts anymore. I was one of the fortunate traders who went down because I got bored and, you know, wanted something to do. I ended up trading on those 5-minute and 1-minute charts. I was like, yeah, I'll go and do that. And of course, I was one of the fortunate ones that walked away, at least in a profit, if not close to break even. And I didn't get destroyed. I did get mentally destroyed because I would take 8 trades, win them, and the 9th trade would wipe me out. I did get mentally destroyed in the fact that I would wake up at 2 in the morning or 3 in the morning to check my trades. We're in New Zealand, Australia, or something like that while I was in South Africa. So yes, it did destroy me in that way. If I had to leave a trade in, it would it would drive me insane. So yes, it did affect me that way. But financially, it did okay. You know, I walked away from it in quite a good position. And I made good profits at some stages, you know, as well. So you had those highs and extreme lows from day trading, which is what you get. The 4-hour trading, much more relaxing. It either makes you a profit or it doesn't. It's a bit more like the investing. The investing is set and forget, you know, it's making you a profit. It's great. The 4 hours are much faster situation of that, where you are trading and but you are expecting a profit in a few days, but you can at least leave it and wait for it to make that profit or sit and draw down or whatever the case. But managing your risk and taking small losses still. Whereas day trading, you use the same strategy, but it's a form of, it drives me insane. Okay. Yeah, don't make you give it a go, Trev. Just remember, I don't ask anyone to do what I'm doing, but by the same token, if you are seeing it, if you are on the 5-minute charts and you're seeing it, then think about it. You know, think about what you can do to change it and make it easier for yourself. One of the worst things in the 5-minute trading for me was taking 8 trades, doing so well, being on that high, and then messing it all up on the 9th and 10th trade, and basically ending on a break even after all that work. You know the amount of work you put into 8 trades? You put a lot of work in. Now, people say you do nothing. You put a lot of work into those 8 trades, and then one trade wipes it all out. That's soul destroying. It's absolutely soul destroying. The nice thing about 4-hour trading is it kind of works the other way. you lose, you lose, you lose, you lose, and you think, am I doing this right? What's going on? I've lost 5 trades at a 1% per trade. So let's say it's $1,000 each. You've lost $5,000. And you're looking at this and thinking, this is insanity. And then that 6th trade hits and it makes you $10,000. And then you think, well, this is worth it. Now I feel good. I actually made a decent profit and cleaned up all those losses. If you just flip it around and do it the other way around, completely changes everything. But you can do that on the higher time frames. Really difficult to do it on the lower time frames. Let me tell you, it's not easy on the lower time frames. But guys, on that note, I'm going to call it a day. I'm going to thank you for being here, and I'm going to hit the road. It's been great again. It's been so much fun being with you guys, as usual, and talking a whole lot of rubbish to you. But don't forget to watch that, the beginning of the video, where I go over the one singular system for you and talk about that. Watch Tuesday's video as well, which I talk about that as well. I do have another video for you coming out tomorrow, another educational video, a bit of fun for that, and another one on Monday, obviously. We've got the trade of the day every single day for the members in the morning. And I really do keep myself busy, don't I? Interesting. But guys, thanks for watching. Thanks for being here. I hope you enjoyed it, and I hope it's been fun. And I'll see you guys on the next shows. Don't forget, we've got another one on Tuesday, 1100 GMT +2, and we've got another one on Thursday at 1400 GMT +2. If you're not a member yet, join. It supports the channel. It's good fun. Buys me lots of stuff and coffee and things like that. Thanks for watching. Till next time. Cheers. Ciao.